Welcome back to another episode of Dirt, Grit, and Stupid Shit, the adventures in real estate. Tiffany, introduce yourself, introduce your company, because I know you're the owner of your company, and let's hear some crazy stuff from you.
I'm Tiffany Sicard. I am the owner of A1 Mortgage Services here in Denham Springs, and yes, we try and give those 10 Commandments out to people because
Do they listen? They don't listen to you? What?
Some listen, some don't.
Tell them some of the crazy shit that happens as you're going through this loan process.
Well, I can tell you one thing is even after giving out the 10 Commandments, I had this one couple that we got like a week till closing, till their house was finished. They were doing a construction loan, and I tell them, don't buy anything, don't do anything, don't make any large deposits, don't do anything different than what you have going on right now, because right now how you have it, you're approved, everything is good to go. We get our clear to close.
Now, that's the famous 3 letters in real estate, CTC. I know when you tell me that, we going to closing. That's what you got, CTC, on these people?
Yeah, we.
And then some stupid shit happened?
And then some stupid shit happened. So you see what had happened was...
Okay.
Is we had to get a statement from them because they wanted to do the option of getting their gift funds for their down payment from their relative.
What's a gift fund?
That is a down payment that is gifted from either a family, it has to be a family member, or a close relative that a borrower can use for their down payment.
Because they don't have it. So,
yeah.
Mommy going to loan it.
No.
Well, you know what?
No.
Okay. I'm just
never
trying.
loan it because then it
they're
becomes
going
a
to
liability.
gift it. Sorry, they're going to gift it.
Had one of those recently also where the parent put on the check that they gave them that it was a loan. I'm sorry.
Ooh, now you know what?
That.
I didn't know that.
We can't see that. And then I understood it from the parents' point is they were like, well, it's for their loan. Not from a lending side. It's a loan. You wrote loan on the check. It's a loan.
All right, so we CTC, and what happened on this stupid shit? Tell me.
Well, about 7 to 10 days prior to closing, we have to do what's called QC.
What's that mean?
It's quality control, and that's making sure that their down payment and everything has been sourced, because a lot of those, we get those prior to funding conditions. Basically, it's just we get everything cleared, and we just rely on them to get us the last document that we might need, which it would be the prior to funding, which is sourcing the final funds. Say because they were waiting for the check to clear from their donor's account to their account.
Like that gift money.
The gift money.
Okay.
And so we had to get an updated bank statement because we had to prove those funds going into their account and the funds coming out of their donor's account. This is why I always try and suggest a wire, because it's the easiest thing. Because then we only have to show the parent's statement or the relative statement and provide proof that the wire's been received by the title company.
All right.
Well, they took the other route. They wanted to get the check from their donor, deposit it into their account, and then so we had to source
Wait
both.
for it to clear and get all. Was it snail mailed on top of that? I mean,
we have had that also. People still do that.
No.
So we get the statement in. We're like, okay, yeah, I got the funds in, and I try and go through everything, and I seen something on there, and I was like, oh well, maybe I'm just overthinking it. I got to send it to the underwriter anyway because it's what they're asked for. It's already in my hands. I've got to turn it in, right?
Okay.
So the underwriter calls and says, we got this liability showing up on this bank statement. Can you find out what this is? And I was like, sure.
What liability?
He went and bought him some rims and tires for his truck. Financed them.
Oh, and didn't you tell him don't buy a vehicle, appliance, don't make a large deposit? But he decided to do what?
He went and bought him some new rims and tires for his truck.
He gonna like living in that truck?
That's what the 10 Commandments says. It says if you go and buy a vehicle, you better be careful because you might be living in it. And, we were pretty close on ratios already, and this was one of those loans where you got to send off and get that certificate from somewhere else.
And so he couldn't buy it, huh?
Well, thankfully, he had just gotten a raise, and we weren't taking that into consideration. And so we were able to ultimately end up making the deal work. And because we did it, the 7 to 10 days prior to closing.
That's extra work you're having to do. And if you want a loan officer, mortgage broker, you're the owner. If you didn't know that and how to, that's just extra work to make this all happen. So this man don't live in his truck.
Exactly. Well, him and his wife and his children. Just little things like that. But it's always trying to tell them, tell us everything. Just try and have that conversation up front with them and build that relationship that you and I talk about all the time to where they will open up, because we're going to find it out. Like, we're literally digging into everything. And
it's going to pop up. Because don't you have to, when you go to QC, so your quality control, then you have to VOE it again, which is verification of employment.
Yep. Got to do that all over again.
Aren't you going to maybe, I don't know if you pull their credit again? I mean, I don't know this part of it. And if it don't line up, we got an issue there?
It's not technically pulling their credit. Well, we don't do what's called a hard inquiry. It's a soft pull. So basically, they're just re-verifying. So when we say don't run up your credit card, so like don't go run out and go buy a whole bunch of furniture or a whole bunch of new home decor just because you're getting a house. Because if that statement cycles before your loan closes, guess what?
You're in trouble.
Your balances just went up, which means that your payments can go up, and then that may affect your ratio, because if your payment goes up, guess what?
You can't buy it.
There's a possibility.
Well, that's usually what happens.
Yeah.
So you mentioned something about a hard pull, soft pull. Can you really tell me what a hard pull is versus a soft pull so they can understand out there?
So soft pull is technically whenever we're doing like the pre-qual phase, we'll do just a preliminary pre-qual credit report. And it still gives us all three bureaus, and it kind of gives us an overview of what the credit is, but it's not doing the physical hard pull, which is the RMCR, which is the residential mortgage credit report that all mortgage providers, that's the credit bureau that we all get. And that's the truest, that's what I call the truest of true of credit reports, because it shows you all three of your credit bureaus, and it's the most accurate.
Okay. So like like AT&T and Verizon, is that like a soft pull or a hard pull?
Those are soft.
That's what I'm talking about.
Yeah, it's not going to show up as an inquiry. Sometimes I've seen where Demco won't pull your credit, but like I've seen AT&T, like when they're coming out and doing the U-verse, if somebody goes and does like a Verizon.
Spectrum does that.
Yeah.
That's a cable company. Spectrum is a cable company out here in Denham Springs. So sometimes we say these words and we don't know who's listening.
So I don't want to say that they're not.
So
some of them do. It just depends on what you're doing with those providers and what they require. So like if you're going to go and get like a new cell phone or a new account and you're using like their equipment, I think they will pull, like, and it'll show up as an actual inquiry versus a soft pull. Like when you're doing insurance and stuff, that's like an internal score and things like that.
What about buying a car? You know, we always tell people don't go out and buy a car. I love these people that say, Sondra, I didn't go buy. Look, I know we're going to be closing next week. I didn't go buy a car. I just signed for my mom as a cosigner. Like, what the hell?
You're still liable for that debt. Like, you might have just co-signed, but you're still liable. That's the whole point of being a co-signer is, you know, if they default, it's on you.
Right.
I had somebody ask me recently, they're like, yeah, I'm going through a divorce and the judge awarded him the house and he's been late on it for 4 times, and how does that affect me buying a house? Well, it affects you a lot because it's still your debt. It's still in your name.
Well, that's right.
Just because the judge awarded it to them, okay, we'll go fight that off in civil court or wherever, divorce court, but you're still liable. Until that debt is out of your name, you're still liable for that debt. Here in Louisiana, a lot of people are like, I want to buy a house. First question on the application, well, third or fourth question, are you married or unmarried?
Oh, have you had people lie about that?
Oh, all the time. Like, how do you not know if you're married or not Harry.
Well,
In the state of Louisiana, if you have not got that final judgment that says divorced, you're still married.
That's what people told me.
Yeah, because this is a community property state, and if you're trying to do anything other than a conventional loan, well, guess what? We got to see both people's credit.
Yeah.
And it don't matter if you ain't seen him in 3 years and they can't find him. We've heard every story under the sun.
Oh, look.
We've been trying to serve him for like 10 years. I ain't even seen him.
What the hell he at? Under a rock or something?
I mean,
probably in jail. You ever had to
Girl.
I've had to go to the east of Baton Rouge prison to get a seller to sign paperwork, and it's really fun. I had a buyer on the other end. That was a little tough, and I had to take the lender with me. This was years ago, probably 15 years ago.
Yeah.
That's weird. You ever had to go to prison to do that? Just asking.
I've never had to go to prison, but I've had attorneys call me because they had to go and try and get the final judgment for a divorce to where we can get, or if they were, say if they have kids here in Louisiana, typically you have to be separated for a year to be able to get the final divorce.
I've never understood that.
Some
I have. So this is way off the subject, but look, I've never really understood. You can get married tomorrow,
yes.
right? You can get married tomorrow, but your ass can't leave for a year. You gotta be separated. Who said that?
Not if you got children. Not if you got children.
Oh, it's only if you have children.
Children, it's 6 months if you don't.
Wait. So no children, you can't get divorced for 6 months.
6 months. Well, it takes you 6 months to be finalized.
Well, it didn't take us 6 months to get married. Why is it going to take us 6 months?
I don't know. I do mortgages. I
understand that. So we back to the state, and people listen that don't understand that we are a civil law. So I'm licensed in Louisiana, and I'm also licensed in Mississippi.
Yeah.
And it's really been fun lately.
Now you have to know both terms.
Well, you got to know the common law. Everybody listening to this podcast, if you're not in Louisiana, you are in a common law state, so you're really not going to understand us weirdos. That's what I call us, the weirdos in Louisiana. We are civil law, we're Napoleonic, we're French. So when you use the word usufruct, everybody thinks I cussed them out. I'm telling you. It's really weird. I'm not kidding you. It's weird. It's weird.
Usufruct means I'm going to use your property. You going to let me?
No, usufruct means the use of your fruits. I'm going to use
means your property.
Fruits. Anything you got. That's right.
Okay.
Yeah, that's right. It's kind of weird.
All right. Well,
I'm not kidding you. So, what? It looks like you're fixing to say something.
Going back to the community property thing is, I was going to say, is a lot of people, if you are going to be in that situation or you see yourself heading in that situation, there are some things that you can get your attorney to do ahead of time that can help protect you if you are looking to potentially buy a house before your divorce is finished, is what I was going to say.
Yeah, and like if you need more information on that, contact Tiffany Sicard.
No, I'm just saying, like, to where you don't run into it. I'm just saying.
Well, that's why I stay in my lane. You stay in your lane because I don't know all the tricks and trades really of financing.
I'm just saying if they want to try and keep it from us, like at least have something in place to where you're at least attempting to do it right. You're just not trying to just not do it, you know?
Yeah. And I'm
Before they
sure,
lose them for 10 years, you know?
Right. And I'm sure people out here, I've seen it before, they fill out an application and they just love fraud.
Oh, yeah, they do. I don't like the F word at all.
I know. I know.
People, I have
and we see it. I've seen it. I'm sure you have seen it. I have recently seen it. It's not any fun. I have paperwork on the wire fraud stuff that if my clients receive an email that looks like it's coming from you or coming from the title company, they have to pre-sign this paperwork, and then if that happens, there's a number for the FBI, and it's all on there, and I have to call.
Yeah.
I've only had to call one time in my 24 years because those people lost $90,000.
Yeah,
totally.
I kind of feel bad for the good ones out there because those people, you know, you have your people who have the really good credit and they have all their ducks in a row and they've done everything to be able to get their house, and then you have, well, why do they need to know all this? Well, I'm sorry, but you know, somebody else messed it up for everybody, and so if we can try and maybe get them to do right, then maybe it'll make it better for all of us to where we won't have to have so much information.
Yeah,
and we won't have to.
Lending has changed, hasn't it, in the last 20? Because you've been doing this how long?
25 years. Boy, has it changed. Yes.
So tell me, like probably one of the biggest things that have changed that you're always seeing that just keeps coming back to stupid shit.
Well, starting about 25 years ago, we had what's called Ninas and Sissas, and that was no income.
What?
A Nina and a Sissa.
Nina and a Sissa.
And that was a no income, no asset loan.
Oh, I had one of those.
It's basically if you had a 620 credit score, the bank was giving you money, and it was.
I had one of those.
No income, no asset.
I called that a no seed, a monkey here, and
then the Sissa to the Nina was the stated income, stated assets. So that was your self-employed people because they didn't report a whole lot of income, but their bank.
Sissa, that was me then, because I've always been. It
was always the Sissa, not the Nina.
Yeah.
But yeah, it's come a long way since then because now it's like you used to have no docs and you could have just a 620, and now if you got a 780. We still asking you for the full round because
that's what I don't understand. I mean, why you got to ask for people that are doing really good? You know, like my parents, they probably have like an 850 or 900. You know,
but some people have learned the tricks of how to get their score up just because they're trying to do something. And that's
you can go to TikTok, man. It'll show you how to do stuff. How to get
that's why. That's why I'm just saying.
That's crazy
because everybody wants that quick fix, and there's
never a quick fix.
Well, that's how come, the authorized users, they started getting strict on those because a lot of parents were just putting their kids on there and then, they were graduating high school with a 700 credit score.
Have you ever, this happened to me.
Yeah.
But you wasn't the lender on the other end. So I've had a buyer at one time want to pay cash for a property and just finance like $75,000. The problem he had, this didn't fly either. And I don't know, excuse me, I don't know if it was because of his name, but he has to be checked on the terrorist list. You ever heard of this terrorist list? If somebody is paying cash and maybe they want to borrow a little bit, and I guess it's like an abstracting of that person. Anyway, he didn't pass. He's on a terrorist list. I'm not kidding you.
Oh, I don't know.
I think I mentioned this to you recently. We might have talked about it on a different deal that we had. But yeah, so it's a terrorist list, and they get ran. Their name does. And I think because they want to know where the cash come from,
Yeah. So there's that type of background because that anti-laundering and all that kind of stuff. But yeah, if you're bringing too much cash, they still want to know where those funds came from, and if it hasn't been sourced for at least 60 days.
See, I think that's bullshit. Because I know old people who have mattress money. People, especially elderly people, they put money in their mattress. Okay? This happened probably about 10 years ago. A seller, I represent a lot of sellers, a little bit more than I do buyers. And we go on a closing, and she was buying a condo over in Baton Rouge, right outside of Denham Springs here. And she decided at the last minute to bring $50,000 cash to the table to put down extra after the HUD, back then it's called a HUD instead of a CD now, had come out. I said, what the hell are we going to do with this? And she says, I want to put it down. I said, well, your lender's right there. You might want to talk to them. And I don't know if the title company take cash because they don't.
Some do.
Well, this was crazy. $50K. And I asked her because I'd helped her pay for a moving truck. She was like 79, maybe 80. And so we got the moving truck over there, and she goes, well, I got to go, or either you got to go and go watch these movers put my stuff in the house, the new house I'm buying. Okay. I went over there. She come back. I mean, they got it straight at the title. I don't know what they did. They got it straight, okay? But you're not going to believe this. So there's 3 movers. They move all the stuff in. She comes to me. She says, hey, did you watch everything? I'm like, well, I didn't watch them like, flies, but, I watched them. And she said, did you see my coffee can? I'm like, what coffee can? I mean, why am I looking for a coffee can? Really, seriously.
Yeah.
So anyway, so the movers, they leave and everything's done, and it's like 3 o'clock in the afternoon. Everything's done. She says, I'm going to show you my Folgers coffee can. I'm like, okay. She did. She opens it up, and inside there it had aluminum foil. She takes the aluminum foil off of it, and it's just rolled and rolled and rolled with hundreds. It was $25,000 cash in there. I said, why didn't you just tell me this at the title company? You know, you should trust me. I'm your realtor for life. But this is just some crazy shit that I've been through, you know, from financing, from lending, and people coming up with cash. And
yeah, there was an old saying, most of them had them in the coffee cans out back. Wasn't really
that's true.
mattress money.
It can be an old saying, but I'm telling you it's true.
Yeah.
I watched it in between the mattress. I bet you if I lifted up people's mattresses today, I don't know if I'd be finding money, but I'd probably be finding guns.
That'd be true. Probably.
I mean, people hide crazy stuff. And then coffee cans, I always heard that. What you're talking about, I've always heard. Well, just go put your money in a coffee can. A lot of people don't want to put it in the bank. Bank want to chase you down. You can't make large deposits anymore of cash deposits in the bank.
Yep. All because somebody else messed it up for the good ones.
Mm-hmm. Well,
that's why our closing package went from 10 pages to, I think it's at 119 now.
Oh my God! So you're gonna get writer's cramp, like we tell the buyers nowadays. The past 5 years, I've been hearing this. You'll get writer's cramp when we get there. You got to sign your life away.
Yep.
It's true, huh?
Yeah, they have e-closings coming, but I think that's
I
scary.
wish this state would get that. Can you explain?
It's so scary for me.
I understand, but you know, Texas has e-closings.
Yeah.
So explain the e-closing. I want to hear that.
It's going to be set up just how it is now, except you're not going to have to physically sign. You're going to be able to do like you DocuSign now. You're going to establish your signature, and you're going to be able to sign. The docs are going to go out, and you're going to be able to close virtually anywhere. But I think that they definitely need to cross all their T's and dot all their I's with that.
What's the scary part? Why are you on the fence about that, but more on the no-no?
Well, you know, Louisiana's a sue-happy state. I love the state, love my parish, love everything about it. But we're a sue-happy state. And, I mean, you're going to have those people that are going to make it bad for the good, just what we were just going over about the deposits and things. And you're going to have those ones that are going to say, well, I didn't sign that. Prove how I signed that. And then you're going to have to hire somebody that's going to make sure that that's their legal, digitally signed document, that it came from their IP address. And there's going to be all these extra steps. And then guess what that does? We're going to go from 119 pages to probably 150.
150?
150. Or more. I'm just saying. It's going to happen.
There's always a bad apple in every bunch.
Yeah, so, like, why can't we just do good? Just do good.
Do good?
Do good.
If we all were good, it'd be a better place to live right now, that's for sure.
I know.
Just saying.
You just got to put it out there.
Put it out there.
Put it out
in the
there.
universe. That's right. That's right.
Just will it out there. It's coming.
So you seen any other crazy shit?
Well, we have a thing on our credit bureaus now where if somebody has ever been incarcerated, it lets us know. And so my partner got an application here recently, and he had put on his application, you know, that he had a job gap, but we didn't realize what it was for.
Just a little job gap or a big job?
I mean, you know, it was about 18 months. And so we were like, man, I wonder what, you know, curiosity. We wanted to know what for.
Well, you kind of got to know if you're trying to, keep the ball rolling on the lending part of it, right?
Yeah. And so we looked him up, and it was some pretty serious stuff. So, I mean, you know, I guess on one hand, it's a good thing that you know and not know.
Well, that's important to know.
Yeah. It's for safety, you know?
Well, yeah. Speaking about safety, you know, us realtors, we have an app called Forewarn. And it comes with our MLS package that we pay for in the city.
Yeah.
And I use it all the time. If I want to look you up, I can. I want to look anybody up, I can.
Absolutely.
It's real interesting because, you know, I've had situations to where if your gut is telling you no, you better stick with your gut. Oh, yeah. But I like this foreseen app that I have because I even used it I thought it was stupid how I used it the last very time. I was down in Panama City this past summer and I rented a golf cart, to drive around the place with the boys, and we come back and they didn't want to rent it all day, all night like I did. So we brought it back and the lady says, "Can you read this lady's handwriting and the phone number?" Sure, I put it in my app, that foreseen app, because she said she was supposed to have this golf cart back like about an hour ago, and it's way after lunch now. I'm like, well, let me help you out. So I put it in the foreseen. I said, oh, well, she's got 15 felonies and 4 of them. It just brings it all up right there.
Yeah.
I said, and the biggest one was she has no driver's license, recent driver's. How did you rent this golf cart?
How did you rent it?
I know, but people, you had to have a driver's license. Maybe she had a identification card. Hell if I know.
Yeah. But
that app is good because, there's a lot of safety things that I teach a lot of agents. For example, no one even thinks of this, but just because you get a call and a buyer wants to look at a house, usually you're the first one there because you want to get the lights on.
Yep.
You want to look like you're on time, but your ass better not park in that driveway and let them park behind you because they trapped you.
Mm-hmm.
And
park on the road.
People don't even think about that.
Park on the road.
Park on the road so you can get away or back into their ass.
Let me tell you a real quick story what happened to me.
All right, tell me.
About 20 years ago.
Uh-oh.
I had this conversation with somebody the other day. Mm-hmm. Just because we're on safety is always, always, always go with your gut. I had a client, because, we're talking 20 years ago. Somebody did an application. You was meeting with them. You didn't mind going to their house. You didn't mind meeting them at the office after hours to accommodate their schedule, whatever. And I had a gentleman that applied for a loan, and he needed some credit repair. So I had just had my youngest son, and I had scheduled the appointment and everything, and my husband called. Something had happened, and I ended up not meeting with him. So I had called to cancel. He didn't answer.
Okay.
A couple weeks later.
Uh-oh.
You want to know what they come out with?
What?
A serial killer. Guess whose credit report I still have in my attic?
I don't want to guess.
That serial killer. Yeah.
Oh.
I was going to meet with him. And I can probably, if y'all just look at the description of what I look like now. I really did look like this 20 years ago. Kind of. I had curlier hair. But I fit the profile. And had I not went with my gut or said, oh no, you got to take care of that. I gotta meet with this customer. I need this loan, because sometimes we do get desperate.
That's the problem. People don't think.
We have a realtor. We have a realtor waiting on this pre-qual. We have this customer that needs this education. We want to try and make everybody happy, so we're just doing whatever it takes to get it done. And not everybody takes into consideration the safety things of some of those things, or what are you doing to get it all done. And had I met with him, things might be a lot different. I might not be sitting here right here.
That's true. That is very,
so you got to
true.
take those precautions, and you got to do that. And because there is some stupid stuff out there, and there's a lot of
stupid shit. Tiffany, I want to thank you for coming on and my little podcast here. And
thanks for having me.
I think we ought to do. I think we ought to have part 2 of Realtor. I know you say realtor, but Realtor.
Like I say, Louisiana.
Oh, here we go.
And how do you say it?
Louisiana.
There's nothing losing here. We're winning. Just look at this past weekend, what we did. Oh, I'm sorry. We were playing who?
Oh, I knew she was going to go there. Just knew that. Yep. Did you see how good Mississippi State was whipping my ass in the beginning? All right, anyway.
In the beginning. But what had happened was.
What happened was.
Yeah.
So I think we should come back, maybe talk about part 2 of Realtor safety and maybe some of the stuff you've gone through. Let's pick that up on part 2. What you think?
Let's do it.
All right.
Let's
do it.